Welcome back. The market is flat. The Bank Nifty is the one which has kept the market still in the game, or the bulls in the game. Otherwise, you could have been looking for a really bad session, because the Bank Nifty is still holding with about 1.3% gain, courtesy Axis Bank, of course. But stocks which are moving intraday, Tata Steel has now seen intraday slip. So has Idea Cellular, and KN Energy or KN India as well has seen intraday dip. So some of these stocks are turning a bit volatile. Idea, of course, has been the rank underperformer as far as this month is concerned. It's now down 21% this month. Mayuresh Joshi is also with us from Angel Broking to talk about the market. Mayuresh, good morning. Would you be buying today? I mean, would you be putting money at work in this market, or would you wait on sidelines?
Morning, Anuj. I think common sense suggests that looking at the volatility, I think staying away on the sidelines would be a better option. However, I think if you have a view of more than 2 years, and if one really understands the situation, what is happening domestically, you're expecting corporate earnings not to revive very soon, which is largely gestated by the markets. You're probably looking at a capex cycle which has taken time to recover, and private capex probably in that sense would still take at least 2 to 3 quarters. So clearly, I think the markets are gestating these facts very, very clearly in terms of how the domestic internals are panning out. What probable happens in the budget and the reform bills over the next few months will be a key determining trend for the markets. However, I think at the current juncture, we are probably ruled by the global volatility. What happens in China, crude, nobody's certain about that, and that is probably keeping the markets very, very soft. So unless you have a 2-year view, I think you can put 10 to 12% of your money, investable corpus, probably into stock sectors in a very staggered manner. But again, I think it has to come in a staggered manner, and only that much amount in these markets.
Mayuresh, good to see you in today. What's your view on Idea? That one's coming out with numbers, consecutive 52-week lows for the stock, and there's impending competition also.
Morning, Ekta. Clearly, I think these factors have been playing out in all the telecom stocks. And again, as far as numbers suggest over the past few quarters, you're probably seeing stickiness happening, both in terms of how the volume traffic is expected to grow, and you're probably seeing stickiness happening both in terms of how ARPMs are panning out, how the ARPUs are panning out, and how MOUs are expected to pan out. So clearly, with the kind of spectrum auctions, the expected capex spends to go up, which Idea has significantly increased, I think the kind of operating hit that the telecom companies will face, including Idea, can be quite significant, which can take a toll on their return ratios. Having said that, probably for this quarter, again, I think the margins might hold out for Idea, but again, I think the key parameters would probably be a little bit soft. Data revenues might strengthen, but again, I think with competition coming through, you're probably looking at softening in terms of data pricing coming through as well. So clearly expecting soft numbers, and again, I think the call has been largely that the telecom sector will underperform over the next few quarters.
Okay, telecom is going to underperform. That's the call from Mayuresh. What is going to outperform, Mayuresh? In fact, as we speak, the market is seeing quite a bit of slip. Let's pull out the intraday chart of the Nifty, and the mid-cap index is now well and truly in the red, and it's at the low point of the day now on the Nifty. 7293 is what we have. Let's pull out the stocks that are leading the market intraday decline. Look at Reliance's intraday chart, and Reliance has very swiftly corrected about 9% from the highs. This is almost similar to what happened last quarter when the stock had a big rally, made a new 52-week high towards the results, and post results saw one-way decline despite good numbers, and that story is repeating. Reliance now at sub 1,992, and that's the biggest drag on the market, in fact, as we speak. Mayuresh, we did discuss this on the results day, that a lot of good news could be in the price, but at current levels, would you want to buy the stock, or do you think it needs to correct more?
So clearly, Anuj, I think the discussion was on the same lines, and I probably envisaged that the stock had run up with a lot of expectations, so correction probably was due on the stock. It has probably come through. So again, I think the same logic applies. I think a part of the corpus on declines can be put in for Reliance, and again, I think the core facilities, both in refining and petchem, as they start getting commissioned over the next few quarters, you're probably going to see some amount of stability happening both on the GRM front as well as on the petchem side. So clearly, I think if you ignore what Shale is probably doing at this point of time, and even if you ignore the retail and the telecom contribution, which you're not even estimating in our FY17 numbers, you're still probably seeing petchem and refining driving Reliance core performance. It's largely at the end of its capex cycle, which effectively means that the compressed ROEs that you probably witnessed over the past few quarters should start expanding over the next few years. So clearly, I think our long-term horizon stays very, very positive on Reliance Industries. Any dip probably in a small staggered manner, I think long-term investors can definitely start chipping in.
Okay. Mayuresh, post-Axis's numbers, are you more confident in terms of what the likes of ICICI Bank might report this quarter, even SBI, PNB, Bank of Baroda, or is it just a case-by-case story for banks at this point?
Right, clearly, I think it's going to be a case-by-case story, and clearly, if you look at the PSU structure, you're probably looking at the restructured book being pretty large. So, a case point being PNB, the restructured book as a part of the total advances is close to 10%, and nobody is really sure how much slippages can happen on that front. Having said that, probably on the Axis Bank numbers per se, I think we did expect this quarter and the next a lot of cleaning up to be done by the banks, specifically the larger private sector banks. And again, I think that process is very much on. So, I think the numbers post this quarter and the next would start appearing far better. And as the managements have put through, I think if the credit growth starts reviving over the next few quarters, the kind of operating leverage benefits that the large private sector banks have, I think they'll clearly ride this trend, and in the earnings growth should be far better than what really one expects. So clearly, I think a bunch of private sector banks, as I've been repeating time and again, is something that long-term investors can look at, and that also de-risks your portfolio risk by investing in just a large private sector bank at this juncture.
Okay, by the way, there's a lot of stocks now seeing intraday decline. Pull out ADAG stocks. That's the bit of a barometer for retail sentiment as well. So if you pull out intraday chart of say Reliance Capital or Reliance Communication, both these stocks have lost about 2% in a matter of last 5 or 10 minutes of trade when this decline took place. So that's Reliance Capital. It's a vertical decline on that one, trading at the low point, and Reliance Communications as well. Both F&O names, of course. That stock also trading at the low point of the day. Reliance Communications, Reliance Infra as well is now trading at the low point of the day. Indiabulls Real Estate, NCC, these are a couple of other names which come to mind as far as the intraday dip is concerned. And of course, we have seen the decline in metal names. Mayuresh, what about say something like a Lever, which has been a big underperformer on the way up and now even on the way down is not providing any kind of safe haven for investors?
So clearly, I think the volume growth was largely beating analyst expectations at 6%, but this was more to do with what has probably happened in terms of pushing their products through. Secondly, I think if you look at the raw material composition, I think the inflation, deflationary effects that we've probably seen come through, I think have clearly played out on the gross margins for a lot of FMCG companies. But would that translate into real growth going forward? I think there is competition, the valuations again appear headwinds for HUL. So clearly, I think the stock does not appear lucrative at this point of time from a valuation standpoint. So I think I'll be extremely selective when I'm looking at the FMCG pack and probably looking at rural trends over the next few months in determining how the volume growth patterns will pan out for the next few quarters.
Okay, all right, Mayuresh, we're going to leave it on that note. Thanks very much for joining in and talking to us. Well, like Anuj mentioned, it has been an intraday dip that we've seen, and a majority of it is because of the global reversal that we've seen, like we've been pointing out. Anuj, what would you make of it? It was